Okay, traders, listen up. ICT is about to break down the core mechanics of his algorithmic trading strategy. Imagine tracking liquidity to pinpoint where the market's headed next, then timing your entry using what he calls a market structure shift. And the best part? He's going to demonstrate it all with a live trade. This is the real deal. So, first things first. ICT unveils the fundamental pattern he spots each day. Picture the market hunting for liquidity, then suddenly revealing its hand with what he terms a market structure shift. That's your cue to pay attention.
You look at this short-term high here, right before this low formed. When this high is taken out right there on that candle, that's significant. Only if this run down here has traded into sell stops, okay, below an old low of some kind. It could be a double bottom, it could be a single low, okay, but it's got to be trading under some retail idea that would be viewed as support.
Up next, ICT is going to break down how you find an entry after a market structure shift. Oh, and let's not forget, he wants to make it really clear what he means by his signature order block concept. He actually claims to have invented it. So let's dive in and see what he's got to say.
There is insight that everybody needs to understand because they're out here running around on YouTube trying to teach order block theory. Order blocks. Okay, I invented it. It's mine. No one talked about it before me, and I first mentioned it in 2010 on baby pips. Prior to that, 1996, I was only teaching it to people one-on-one in teachings. That's it. Okay, you can't find it in books prior to that. It's mine. No one else taught it before me. It is mine. So I'm going to correct all of you today so that way you can teach your people correctly and not hurt them. See these down closed candles? See that? That's all one continuous order block. What's it doing? It's inside that pool of liquidity, sell stops. Where's the open on that series of down closed candles? Right here. That's the price level extended out in time. Boom. So inside this fair value gap, this opening price on the order block, that's your buy, plus 3 pips or whatever for spread. And that's what you would use for a limit order.
Here, ICT dives into the core theory behind his model. He lays out how an order block signifies a change in the state of delivery, meaning the price algorithm undergoes a fundamental shift in direction. It's all about recognizing these pivotal moments.
High frequency, high power, high probability bearish order block. Forget everybody else's interpretation of my concept, the order block. That's it. Okay? What is an order block? You see a lot of people asking, what is an order block? Only my students in mentorship know what an order block is. Okay? What it is, it's a change in the state of delivery. Okay? It's a change in the state of delivery. The market's being offered higher, 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 higher in these two up-close candles. How did this series of up-close candles begin? With this candle's opening right there. That opening, once this candle trades below it, that changes the state of delivery. So you go back to that point of reference right there. And that's why it's sensitive. The algorithm remembers that right there. Okay, that's all I'm going to give you on the free mentorship level. But that is your answer. Okay, that is what an order block is.
Ready to see theory in action? Watch ICT as he takes these concepts to a live account trade. In real time, he identifies a setup, executes the trade, and captures over $1,100 in profit. It's all about precision and strategy, folks.
And I'm going to highlight in TradingView a fair value gap after a market structure shift that's bullish. And I'm going to show you an imbalance that is in a premium. Okay, see that? Just the opposite of what I've been showing you. Change the color on this. And the idea is I'm going to see it drop down into that green area. But if you look real close, there's actually a smaller little fair value gap just below that green box. Okay. This is not supply and demand. Okay. The idea is I want to see it drop down to that green box. And I don't know if it's going to dip into the lower fair value gap. So whenever there's two fair value gaps like this is for your notes in case you missed this. The idea is I'm going to let it trade down to that lower one. I'll sacrifice that better entry. And if it trades down there and trades into it and then comes right back up into that green box, the first higher fair value gap, I'll enter when it's in there and expect that the lower one won't be retraded to. Okay.
By grasping how algorithms hunt liquidity and craft market structure shifts, traders unlock high probability entries. Use fair value gaps and spot-on order block identification. It's a strategy worth mastering.